Hi there, Serial Trader here. Let's check in with the major US indices and starting off with the wave chart on SPX. So as far as the wave count goes, I haven't made any changes here yet. We still haven't had the 4-1 invalidation by this interpretation, and that would come in at 26.21.53. So we're still below that. We basically just stopped going anywhere. We went trendless there for the last couple sessions. Couldn't seem to get into that 2600 area. That was that former support area, which is now looking to become new resistance. So that seems to be serving up resistance, certainly on Wednesday, Thursday, and Friday. Wednesday we got as high as 25.95.32, and then Thursday 25.97.82, and then Friday 25.96.27. So really having difficulty getting above that area, and obviously looking to roll over here soon. Although no signs we've actually started doing that yet, but certainly anticipating it any day now, essentially. I'll also point out that just on this base channel, since we kicked off this bear market, we're now up at that median line, which could serve up as a nice resistance area for this corrective rally. So certainly watching that to see if we get a reaction. RSI here on the daily. We're still in that RSI bear market resistance zone between 50 and 60, currently at 53 on that daily RSI. So everything's just poised to roll over. Now it actually just has to cooperate and do so. Now, obviously, looking for it to find its top here and head down in minor wave 5 of intermediate degree wave 3. And obviously, even if the wave count, the short-term wave count has to change here, the implications are still the same, and that is that we have a 3-wave bear market rally within a larger downtrending market, which is in a larger impulse of decline that's not complete yet. So even if we get 4-1 overlap, go a little higher, it's not going to change the overall expectation of this thing to roll over. Just thought I'd point that out. And then obviously this is that 2009 uptrend line, the lower trend line. That'd be an area to look for an initial reaction of once we get down here and take out December's lows, which is the minimum expectation. And then we have the 1.618 area there, which is kind of in the mid 2200s. So some areas of interest to look at there once we can start going down and attacking it. All right, I won't go any further than that here on this chart. I think I'll just point out on the hourly chart. Now we're working a WXY double zigzag, but I've just taken the labels off to clean it up a little bit. Just thought I'd point out some shorter term technical divergences. So here we have the slightly higher high in price. Okay. So this was 25.95.32, and then we made a slightly higher high, marginally higher high at 25.97.82. And while that was happening, we actually made lower highs on the MACD moving averages and lower highs on hourly RSI. So you have a nice bearish divergence there on these technicals, combined with everything else. The overall wave count, where we are in this channel, finding resistance on the median line, that former support shelf of 2600 now looking to become new resistance. All that combined is looking like we're getting ready to roll over here anytime now. But again, we have to actually see it cooperate and start doing so. I mean, the first thing you'd look for is taking out at least just an initial short-term support level, which currently on this hourly chart would come in at 25.62.02. So taking that out would be an initial sign that we may be rolling over, and that's roughly 20 points away. So it wouldn't take much if we can actually get going. All right, that's probably all that needs to be mentioned here on the trading view charts. We'll go over to the thinkorswim candlestick chart. So as far as daily candlesticks go, well, we're nicely in this overbought condition on the daily oscillator, and again, that's marked previous tops quite nicely and also previous bottoms. So that's been reliable. We didn't quite get up to that 50-day simple moving average, which was certainly a potential to do that. That's currently right around 26.35. Our actual 4-1 invalidation on the short-term count would come in by taking the bottom of this bar out, and that's 26.21.53, so we're still below that. So no need to change the count here yet. Also, on the candlestick pattern, we had a bullish engulfing on Thursday after a doji on Wednesday. But then Friday, no follow through and actually failed to make a new high above the high of the bullish engulfing candle on Thursday. So what would actually be nice to see is taking out the low of the bullish engulfing candle, which would actually make it a failed bullish engulfing candle, which is actually a pretty good sell signal. There's kind of a tendency of a failed buy signal to be a good sell signal, and also a failed sell signal to be a good buy signal. But we have to take out that low, which is at 25.62.02, which is also that initial hourly support level I discussed. So that'd be a nice level to take out, to at least on, without much confirmation, early sign that we're starting to trend back down again. Now on the weekly chart, just have a look here at the weekly chart. Basically came up to that weekly T line, roughly sitting on it right now. In the past, that served up some pretty good resistance, so we're looking for that to do so again. We basically had 3 positive weeks now, and that's the most we've had since we began our decline there from the all-time high. Previously, I think this was a 2-week bounce, and that looks like the best we've had. So certainly enough time has now been corrected from the lows there to be looking for a resumption of the overall downward action. So that's good for the weekly. Probably good for SPX here. Okay. Obviously, we also want to get below that daily T line, which would be a good sign that we've resumed our downward spiral. And right now, the daily T line is actually sitting at a pretty close level to that 25.62 area of interest I mentioned. Okay, we'll go to the Dow Jones Industrial Average. Dow basically showing the same picture here. Bullish engulfing candlestick on Thursday. No follow through on Friday. And obviously looking for that bullish engulfing candlestick to fail by taking out the low of 23,703. So that's an initial thing to look for on the Dow. On the weekly, basically sitting at the weekly T line, so looking for that to serve up as resistance here this coming week. Fail at it. We'll move on to the NASDAQ Composite. NASDAQ Composite, let's see here. Daily. Right up close to that 50-day simple moving average on the NASDAQ Composite. And also, basically just right there, kind of right at that 4-1 overlap level, although didn't do anything past it. So let's see, we got this level was 69.84.34. It went as high as 69.91.37, and then back to 69.75.65 on Friday. So technically overlap there. Intraday, let's see if we have it on a closing basis. And yeah, it appears we do have overlap on a closing basis. So the NASDAQ's count has to be slightly tweaked, more of a 1-2-1-2 count. But the Dow and the S&P still have their other count intact for now. But directionally, the implications are the same, and we're looking for this 3-wave rally off the bottom to roll over and take out the most recent low there at 61.90.17. So the message is still the same. I like that we're kind of finding some resistance here around that 50-day simple moving average. We did that over here as well, and that was quite a nice area to have a sell-off from. Daily oscillator very much in the overbought condition here on the NASDAQ. We do have that bullish engulfing daily candlestick with no follow-through on Friday. Looking for that to become a failed bullish engulfing by taking out the low here at 68.77.08. That'd be a good sign. And that's also close to where the daily T-line is. So really the same message on the NASDAQ, even though the short-term wave count is now a little bit different. The pattern really is the same. Okay, now on the weekly, anything interesting here? So we closed above the weekly T-line on the NASDAQ, so that's somewhat notable. Although I wouldn't read too much into it unless we really start trending up there. But certainly worth pointing out, 3 positive weeks here on the NASDAQ. Looks like an adequate time correction. And downtrend looking to be resumed here anytime. Okay, that's good for the NASDAQ. Go the VIX. And on the VIX, we've come down and we're still looking to set a higher low above kind of this 16 shelf of support. Here we have a couple levels, 1594 and 1609, so right around 16, which is also right around that 200-day simple moving average on VIX, which is currently at 1665. So basically looking for it to start trending back up here soon and finding support in that previous support area. Okay, so that's VIX. As far as my own positions, I haven't made any changes since the last video, so nothing to mention there really. Okay, what else? Go to the VIX VVIX tool, have a peek at that. Alright, so VIX VVIX tool, we're still having a nice divergence here. So VIX making lower lows, VVIX making higher highs and higher lows after finding a bottom where VIX did not. So we did have this VVIX moving average cross, but we did not get the actual signal yet by having SPX get below the blue moving average. But it looks like we're very close. You can see this moving average has caught up quite nicely to the price. So right now this blue moving average is at 25.75. So really, 20 points away or so. It's not far away. And right now we've crossed back below slightly here on the VVIX moving average. So what we're looking for this coming week, maybe tomorrow even, we're looking for the VVIX. We have this clear divergence in place now between VIX and VVIX. Looking for VVIX to get back above the red moving average. And then we'd be looking for SPX to get below its blue moving average here. That would be a confirmed SPX sell signal, and hopefully lead to a nice sell-off that takes out, eventually takes out our recent low there at 23.46.58. So the ingredients for the signal are still in place, but we haven't actually gotten the confirmed signal yet. Ideally, we get it pretty soon here. All right, that should be good for now. Check in later in the week when something significant happens. All right, Serial Trader signing off.